In this video, we'll break down the documents in a small business financial plan and how they help you manage and grow your business. The income statement provides an overview of your business profit and loss, including operating expenses for a given time period. It displays your revenue, expenses, and profit, where revenue minus expenses equals profit or loss. Many businesses create a new statement yearly or quarterly, but small businesses with less cash flow may benefit from more frequent updates. The balance sheet is a snapshot of your business's financial state at a specific moment in time. It shows a difference between your liabilities and assets, which determines your equity. To determine your equity, subtract your liabilities from your assets. The cash flow statement tracks all the money coming in and going out of your business. For existing businesses, this includes bank statements, listing deposits, and expenditures. For new businesses, it includes startup costs and funding sources. A well maintained cash flow statement helps you monitor past transactions and project future cash flow needs. A strong financial plan may also include a break even analysis to estimate when investments will start generating profit, a personnel plan to justify salary costs and employee contributions, and a sales forecast to project future revenue and set goals. Centralize financial documents and approvals in one location and keep everyone on track with Smartsheet.